Man, oh man, what a day. Boy, what a fantastic week. Another one of those days you love being a trader. Hope you guys made some money out there. Got crown reversal off the low. The breakout pullback we talked about last night. I know a lot of you guys did really well today in this entire week, but now let's get focused again. I don't care how much money you made this week. Let's keep it together. We got one more day left on a Friday. I'm going to make sure you guys stay disciplined and finish this week here with some more green on Friday. Now, we have a very important video tonight because we got two important clues right now. First of all, tomorrow's a Friday, and we also got some big ranges on the charts here going into the final day of the week. When you combine these two together, range-bound markets, Friday trading session, it smells like a snap back trading session tomorrow. Maybe some breakout pullbacks as well. If we're lucky, we'll talk about, not to worry, we'll cover the snapback. We'll cover breakout pullbacks tomorrow as well. We have a lot of important trades to be ready for tomorrow. And as always, I'm going to make sure you guys have a roadmap to make some moolah on finally Friday trading session. And before we jump in and get the party going, I'm getting kind of excited just talking about it right now. Before we jump in though, make sure you subscribe to the channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, do me a favor here tonight. Hit that like button for me. Give me a hell yeah down in the comment section below. Either way, all kidding aside though, thank you so much for tuning in, supporting the channel tonight. Enough of the intro though, Joe. Let's get ready for Friday. Man, oh man, where are the best trades setting up for what will hopefully be another great day in the markets here tomorrow? Well, on the 60-minute charts tonight, the Nasdaq and the triple Qs, I got the Emini and the SPYs in front of me here tonight. Remember, we like to use the 60-minute chart as the big picture to plan our trades for the following day. But later on in the video, we'll drill down to some tick charts. Tick charts are better for entries. Good example today, right? Looking at the 60-minute charts here tonight, you would never know how many great trading opportunities there were on the tick charts here in the trading this morning. So we'll start first on the big picture 60, and we'll drill down to some tick charts, and we'll talk entry tactics as we go deeper into the video here tonight. What are the 60-minute time frames telling us right now? Well, we're pretty bearish overall. You can see we're starting to flesh out. Will probably be some channels here on the charts as well. I think the most important thing right now is we're obviously bearish here, so our direction bias is bearish on the 60-minute. But like I mentioned earlier, you would never know kind of inside these candlesticks what's really going on here. So we'll drill down to our tick charts here because I think the tick charts are really giving us the biggest clues going into tomorrow as we talk about potentially snap back strategy on Friday. Now, before we dive into the tick charts though and talk about my favorite trades for tomorrow, let's double check the calendar for tomorrow because there's a lot of things on my mind for tomorrow, and I want to make sure you guys are aware of it. Now, 4 things you want to be aware of. I know 4 things for tomorrow. First, of course, is the personal income number at 8:30 Eastern Time. That is arguably the biggest news that we know about tomorrow. Second thing, of course, is consumer sentiment. You wouldn't think consumer sentiment would be that important, but we have an inflation aspect to the consumer sentiment number. That will definitely be something I'm paying attention to tomorrow. The third thing on my radar is, it's been a couple days since we've heard from Israel and the whole situation in Gaza. They've been sending extra troops to the Middle East, so maybe not tomorrow, but definitely something I'm watching very closely right now. When will that big news explosion or that big news headline disrupt the markets? It's definitely something I'm watching for tomorrow. And the fourth and final thing for tomorrow might be the most important thing, and that is Friday mindset. Tomorrow's a Friday, and one thing we know about Fridays is they tend to get low volume. They get illiquid into lunch, into the afternoon. So my mindset on a Friday is get into trades early, take profit, get rid of risk, but I always try to leave a little piece of the trade open into the afternoon because if you guys have been watching for a while, you know that Fridays, they love to run. I call that the Friday mindset. So 4 things on my radar for tomorrow. Personal income at 8:30. Don't sleep on that consumer sentiment number. That has potential to be a big mover for us tomorrow morning. And again, I'll be keeping an eye out and hoping things will calm down in Israel. But it's been a couple days now, and we're definitely itching to hear some more updates out of that. And remember, the final thing, Friday mindset. Get in early, get rid of risk, right? Take some profit, and then to leave those runners because Fridays, they love to run. Now, let's get back to our charts, though, because if you've learned one thing this week, the money is made on the charts here. It's good to know when the news is, but obviously we want to make sure we focus on the charts tomorrow. Let's go into the S&P and the SPY first, and we'll finish up here tonight. Of course, the Nasdaq and the triple Qs. Keep in mind, the Nasdaq and the E-mini are really, really similar here right now. As I mentioned earlier, the 60-minute chart is clearly very bearish right now. You would never know by looking at the 60-minute just how much opportunity was inside those candlesticks on the tick chart. The tick charts are really telling us kind of where I think the biggest opportunities are going to be for tomorrow. So we're biased on the 60-minute chart right now. Let's now drill down here to the tick charts. This is a 7,000 tick chart, and this, of course, that yellow line right there, that is the 21 EMA. If you're tuning in and watching right now for the first time, there's only one key clue on the tick charts here right now, and that is we have two trading ranges. We're bearish overall, but we have two ranges here on the chart. One, of course, we saw for the bulk of the session here today. The other, of course, happening this afternoon. Whenever we have two ranges like this, what usually happens is we usually end up rotating back and forth around both of these ranges. And so we know that, if you, for example, if you're taking my free video classes right now, you know that ranges love to rotate. And so we sell high, right? And we buy low. We focus on failures. We trade rotation back and forth. And we'll talk more about that, of course, as we go deeper into the video here right now. So the market is going higher here, as you can see, into the open. We heard from Amazon earnings. Remember, we don't care what the actual earnings were, right? That's why I don't talk about that stuff, because that is irrelevant. All that matters is how the markets react to it. So first of all, let's talk about what I mean by that snap back, right? So if we understand these two ranges, right, acting like, again, this rotation back and forth here, what happens a lot is on a Friday, the markets get low volume as the day gets older. And so what will happen is the markets will rip higher, break out, and snap back. They'll rip down, break out, and snap back up. That range is that magnet, and we look for that snap back into the range on a Friday when it starts getting a bit lower volume in the session. So let's talk about this right now. We're going higher right now. Now, as we go higher, I love the idea of shorting right above some of these highs up here. The challenge is going to be that when we have this kind of wide swings back and forth like this, momentum starts to build as the market runs higher. And so it's very difficult to pick the tops and bottoms when markets rotate like this. So there are really two kind of core patterns or core setups. I teach these in our free video classes. One of them will be what we call a failure pattern. So as we go higher, ideally getting up around these big highs overhead with that momentum coming up here, not a great spot to be a buyer up here, right? Ranges underneath us. However, if I can catch some of these buyers trying a couple times, I'd like to use what I call a try failure pattern. We teach these patterns, of course, in that free video course that a lot of you guys are taking right now. Get the buyers trying once, get the buyers trying twice, and then think about it, right? Up around the highs, overall bear market overall. If we can get some rookies buying up there, we can then use their stops as fuel to run this thing back down again, right? Snap back down into that trading range. This would be a buyer failure pattern above the range highs. Now, I mentioned earlier that ranges, especially this type of range, wants to rotate back and forth, right? Back and forth. So as it starts to rotate back down, the key now would be to sell bull traps as it rotates back down again. Now, a bull trap is a really simple pattern. It's a lower low in price and a trap, as we call it, right above that high. Now, in the free video course, we talk about the proper entry signals, right, for that stuff, but that would be what we call a bull trap, right, going lower. So think about now as the market rotates back and forth, and remember guys, this could easily happen a bit higher up here as well. The one thing you want to be aware of though is that as we pop up, trap the buyers once, trap the buyers twice, and then as it starts to roll back and snap back into that trading range, think about that bull trap, lower low in price, and that trap above that high, right? So failure into traps as you rotate back and forth here. Now, one thing that you want to kind of be aware of, there are always going to be some variations of this pattern setup. For example, one of my favorite trades is a V-top off the high. For example, right, it might pop up. We may not get that 1, 2, and then back down again. It may get whacked back down and give you a V-top and start to grind down like that. These can be tricky. Whatever you do, don't chase after it going lower. What we want to do is draw a trend line off the lows, bring it up around that big high up there, and then what do we always say in the video course? Look left, find some prior swings, and remember, look for those bull traps above those prior swings. Now, guys, this could be a bull trap, like I'm showing you right here. It could pop up, be a buyer failure above the 21 EMA. I'm going to keep it simple here right now, but this could be any one of the entry patterns we teach in the free video course. Could be a bull trap, a buyer failure right off of that high. Which reminds me, we've talked a lot about failure patterns and trap patterns at this point so far. I know most of you guys know these patterns, but if you're watching for the first time right now, this might be a brand new language for you, but don't worry. I teach all of these, and I have hundreds of examples of these on real charts and real candlesticks inside of our free video classes. What I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link and take that free trading course, because the strategy you'll learn in that short video series will teach you a simple trick we use in our morning trade room to know exactly where the best winning trades are going to be that day. And then once we know where the best trades will be, I'll teach you my 4 favorite entry patterns to help kickstart you making money each day. Again, I have hundreds of examples of failures, traps, and all the other patterns in that free video course. If you're not making consistent money right now, the markets are way too good not to be doing well right now, hit that link up there, grab that free course. And also too, don't forget too, if you can't grab that link up there, I'll put all the important links down the description of the YouTube video. The free class links will be down there for you, so you can get those if you can't get the pop-up. Also too, if you're on Twitter, I have my Twitter feed down there. I publish updates throughout the day, each day, on my Twitter feed as well. So definitely hit me up in the description down there if you want more details on that. All right, guys, so watch out for that up 1, 2, and then again, if it goes up, right, and gets whacked back down, right, find that channel and look for that. Again, it's always those traps as it rotates back down again. Now, what happens if we don't go higher here? What happens if we end up rolling, right, going lower? There's a bunch of ways we can trade this going lower. In fact, I almost hope it goes lower, because I think that's where we have more opportunities going lower. For example, below this trading range, we definitely have potential for a snapback going higher. But you know, this is a bear market overall. Could we see another one of those breakout pullbacks as well? Now, there's one very specific clue that tells you when to trade a breakout pullback. Let's talk about that here on the NASDAQ as we go deeper here right now. So we talked about the game plan going higher here. Let's now go over on the NASDAQ right now, and we'll talk about the game plan going lower. On the NQ, on the 60-minute time frame right now, again, it's pretty bearish, right? And there's not a lot of clues on the 60-minute. Again, it's amazing how much you don't see on a time chart like this. Let's now drill down into our tick charts here right now, and you can kind of see the NASDAQ right now is a little bit different than the S&P, but it's pretty much the exact same kind of game plan. We have a bear market, and unlike on the S&P, we really only have one trading range. This is what I would call a directional range. It's a bear market into a trading range. And what do we know about ranges? They love to rotate back and forth, right? Back and forth. So as we go higher, it's that 1, 2, failure back in. As it goes lower, what do? You look for traps as it rotates, going lower or up. V-top, grind, don't chase. Find that channel, trap high, right, and back down again. Pretty easy. That's a really attractive trade right there in overall bear market, especially because on the NASDAQ, this looks a lot like a pop into a spike and channel. And what do we know about spike and channels? Spike and channels, they love to pop up right around that first high in that channel. So if I had to guess right now, if it begins to keep going higher here, I would imagine a lot of bears are waiting up there. So keep an eye on that bull trap, that buyer failure, and that snap back down into that trading range. Now, let's talk about the move going lower here. First of all, if this thing ends up dropping, right? If it ends up dropping off the high of this channel, how would you short it? How would you short this thing rolling over right now? What's the one pattern we talked about earlier as it rotates lower? It's going to be a bull trap, all right? So if this thing starts to bail on us and make a run lower, same thing for the S&P, all right? Remember, most of this is pretty interchangeable right now. If it bails and runs lower, it could be year. It doesn't matter, right? It's always going to be that pattern right there. It's always going to be that lower low in price and that trap above that high. It will always be that pattern as it rolls off the high of a trading range or accelerates. Now, if we make, there's one very clear distinction that you have to understand as the market goes lower, all right? If we shoot lower, and we talk about this a lot in our trade room, the best way to buy a move down is oftentimes when it's very scary, okay? And this goes against your instincts. You probably have learned this already, but our instincts as traders, they really aren't very good, right? They're not very trustworthy. What you got to be careful with is when the market pops and grinds down. Okay, when it grinds down like this, these are the ones that are more likely to keep on going. All right, we call these pop and grinds. We talked about this a lot last night on the video. So if we end up rolling lower here, remember it's a range, and so we're looking for that rotation back and forth. Now, what is the overall directional bias right now? We are bearish. We're not a bull market. Right? So if I go higher, I can be somewhat aggressive, right? Being a short seller off that high. If I go lower, I can't be as aggressive. So this is where we take a 2-try failure up, 1, 2, back down. This is where a 2-try failure becomes a crown reversal, right? By going against the directional bias. Now, a crown reversal is very simple, right? It's 1 try for the bears, it's a higher high in price, it's 2 try for the bears, and it's a bear trap below that low. We talked about this quite a bit, right, last night on the video. You can see one right there, right? That's a crown reversal right there, right? We go down, bears try once, bears try twice, trap below that low. You guys should know that because we saw a very good example a couple times right here this morning. So the idea is short off the high, I can be more aggressive. We run lower, right? We pull back. Now remember, this would not be a good place to sell historically because we don't want to sell low, right? There's not a lot of money to make consistently by selling low. So if we can trap in some of these bears down here, get them selling short, we can use their stops to fuel that move going higher. That's the idea behind this reversal. Back up again. So we run lower, the bears try once, higher high, bears try twice. That's how you buy the bottom in a bear market. And then as we start to rotate back up again, what's the best entry pattern? You know this. It's a trap, right? It's always a trap as it rotates back and forth. In this case, it's going to be a bear trap. It's a higher high in price. And these you can see here, they're pretty much the exact same pattern. I call this a crown reversal because it's a reversal, right? It's kind of a distinction there, right? This is a bear trap. It's a strong run up. It's a higher high in price and a trap right below that low. So again, we know that we have that range. We're looking for that rotation back and forth. I have to be much more selective on the entry going against the overall directional bias on the 60. Okay, pretty simple idea. Okay, yes, no. Let me know in the comment section below. Does that make sense? Right? Give me a light bulb. Hashtag light bulb. Right in the comment section below if it makes sense. Right? I can be aggressive going with the trend. I can be more patient going against it. Now the big thing now is remember, if this thing pops down and begins to grind down now, this is usually when a range, well, this is usually when we do this. We take the red rectangle here, we put that right there. We talked about this quite a bit today in the trade room, right? Remember, anytime we see a range breakout, we look for that breakout pullback, right? That breakout pullback. And really kind of the giveaway on these is the way it grinds when it breaks out, right? So again, if it just shoots lower, not always good, right? We're probably going to get it back up, right? If it shoots lower and begins to grind. Now what do? We look left. We mark up that low. That becomes our zone now. We go out. We draw a trend line off those lows. Okay, that's all we have to work with. We pin that trend line up around the high. And we're simply now waiting for that pull back as we go. Now, you know me. Well, maybe you don't know me, but if you're taking my free video course, you know that I love to look left and find those prior swings. These are usually where the best entries are going to be. It could be a simple bull trap, like I'm illustrating right here. This could be, of course, like we saw a bit today, get above the moving average, right? Trap those buyers in, that failure back down, right? Like that, like back here today. Right, like back here today, right? Got that pop down, that grind down, mark off that high, right? Mark off that high. There's the underbelly of that range. We pop up, buyers try, there's that failure, right? Rolling back down. That same idea is the principle we have right here, right? Makes sense? So it pops down, grinds down. The grinder is a huge giveaway. We mark off that low, we pop up around the high. Again, we're looking left over here going that low, the underbelly of that range. And again, I like to look left and look for those prior swings. Get above, bull trap, buyer failure like we saw right there, right? Whichever pattern we get tomorrow, that failure and that run going lower. Also to remember when it comes to targets on these, usually the breakout leg, right? The breakout leg is the measuring leg. Okay, we don't know enough right now about it right now, right? But keep in mind, though, if we end up, for example, pulling back here and running right off of that low, the size of that leg going down is used as a target, right, when we pop back up again. The breakout leg is the measuring leg. The breakout leg is the measuring leg. All right, we talk a lot about measured moves in the free video course. This is one way to use measured moves after a range breakout. All right, guys. Okay, so that gets us pretty well equipped here for tomorrow, right? As it goes up, 1, 2, back down, grab those traps, right? As it rolls lower, it's one pattern, bull traps as it goes. As we go, do we roll lower the crown? Reversal off that low. Does that pop down, end up grinding? Now, here's a question, right? So if we roll lower and we start grinding down right now, right? Could I use the crown reversal to buy off the low? Absolutely you can. But one thing we know is when it grinds down like this, it's more likely to pop up and roll over, right? So I tend to go a smaller size on a crown reversal. For example, right? If we pop down and we know we've got that channel coming down like this, right? We pull over, the bears come in, they try once, they try twice. I'll usually go smaller size, half size, quarter size on that crown reversal because you know that you're playing with a stronger bear market, right? Hope that makes sense, right? So smaller size, and the good news is if you hit those like it worked today, if it hits well, you don't need a full size position because those will squeeze like they did today, right? So just gonna be aware of that, some small details there, just in case you're wondering, can you apply the crown reversal even during that pop and grind? You definitely can, but like today though, right, you want to go a bit smaller size because the potential for it, right, to roll over. And the beauty about crown reversals is that if you're right about them, you don't need a very big position size because that, remember, in futures, it's all leverage, right? So you can get a very big return. You don't need a very big position. All right, guys, so kind of some behind the scenes there we talk about in our trade room. All right, guys, game plan is all set for tomorrow. Will we see that snap back and forth tomorrow? We get the popping grind and the breakout pullback. Time will tell. Time will tell. Now, tomorrow morning, don't forget, the best way to do this is to come out and do it with me tomorrow morning, every morning for that matter, in our members trade room. Every morning, 8 o'clock Eastern time, we get together, we prep our charts, we review our favorite setups, and we trade this stuff together. I'll put all of the membership links for the trade room. I'll put the free class links, of course, in the description of the YouTube video. I would definitely recommend start with the free video course first. That will get you, get you a good solid foundation, learn the basic principles of the strategy, right? Binge watch those examples in the video course, and that will get you ready to come out and trade with us sometime soon in the morning trade room. If you have any questions or any trouble getting access to our free classes, don't be a stranger. We're always here to help out via phone or Skype or live chat. So if you got questions about brokers or data feeds or having trouble with access to our video classes, don't be a stranger. We're always here to help out. So keep in touch on that. Now, get out of here. Enjoy the rest of your evening. We'll see you guys hopefully tomorrow morning or sometime soon in the morning trade room. In the meantime, have a fantastic day out there. Great job. Let's finish the week strong tomorrow. In the meantime, be well. Be nice to each other out there. And be here next time, will ya? Adios, amigos. Bye-bye for now.